Hello, this is Mike Swanson. I run the website WallStreetWindow.com, and the odds are that you're watching this video because you got an email from me telling you that's up. Now, if you're not on my free email list, you got to get on it to get my daily stock market updates and ideas. Scroll below the description of this video and you'll find that. Now, we saw the stock market go up last week, but we saw something happen inside the stock market that's only happened about 25 times since 1945. That is powerful confirmation that this is not simply a bear market rally. And we saw multiple bear market rallies in 2022 that fizzled out, and the market would make new lows, and people that bought into the rallies lost money. We now have powerful confirmation that this is something big, that this is really the start of a cyclical bull market. Now, I'm not saying it's a return to the way things were before 2022, but a lot of sectors, a lot of stocks are going to do very well this year. And I've talked about some of them, the types of sectors I like, the types of stocks I'm following in the last couple of videos. But you got to know what really happened last week. So let me show you some stuff. First of all, you need to know a week ago, Monday, that is, I made note of this, which changed my view of the markets. I was one of the most prominent bears, let's say, in 2022 at the start of that year, because in 2021, I pointed this out. The percentage of stocks above their 200-day moving average was declining while the S&P was going up. And historically, along with an inverted yield curve, this has been the most powerful indicator that a bear market's coming, or at the very least a 20% or more correction. And we got it. It happened. But I was looking at things and I found that this indicator turned up in October, and I took that very seriously. In fact, going into this past week, the indicator was acting stronger again, and we saw even more stocks do well this week. And I was looking at probably thousands of charts, a couple thousand charts over the week, and many stocks had gone up to their 200-day moving averages, consolidated, and broke out again. On Friday, you saw bank stocks, gap down when JP Morgan and several other banks said, hey, we got decent earnings, but we are reserving, we're making some future losses now because we think there's going to be a recession. And they gapped down on the open and they rallied into the green. That's the type of thing you see in a powerful rally too. How long this can last, I'll talk about in a different video. But this is the signal you need to know about. Breakaway momentum. And this is something someone forwarded to me that Walter Deemer, a technical analysis, posted, and he linked to his information. I looked him up, and this guy has been around for decades. And first of all, take a look at his website. You'll see what I mean. But more importantly is, what does he mean by breakaway momentum? So here's his website. It looks like it was made in 1990 or something, or 2015, perhaps. It's a primitive looking thing. You could tell this is not a TikTok man. And this is not a guru, pumping crypto, one of these social media stars. This is not Cathie Wood. This is a serious man who does studies of technical analysis, historical studies. And he's not trying to predict the future. Making money in the markets is not about predicting the future. Don't confuse what I'm saying in this video with a prediction about the future. That's for Cathie Wood. And I find predictions completely useless. When I heard crypto gurus say crypto or Bitcoin is going to 1 million or 100,000, I completely ignored those people. That type of language is charlatans. People who talk technobabble that you can't understand, They're trying to hype you up. They're trying to mislead you. That's Kathy Wood. But when people do studies of real data, how the markets have traded through history, and you can see the same things repeating right now, and you can go back and see what the implications are, that's not predicting the future. That's identifying a change in trend. And making real money in the financial markets is about identifying those turning points and taking advantage of them. And I believe we're at such a turning point, and that's what this video is about. So this is what he's talking about by breakaway momentum. And I'm going to link to this in this video and the post on my website about it, so you can read this and study this information for yourself. It's part of what I'm trying to do, is get you to good resources. I'm not trying to be a guru, pretending like I know all the answers. I'm trying to guide you to good information. So he makes a note that in bear markets, downside momentum tends to peak at a decline as there's a selling climax. And we can go back and we can see that the internals did that when the percentage of stocks fell below 15% that are above the 200-day moving average. That happened in October. Now, one of the things that didn't happen that I was looking for was for the VIX to get above 40, because since 2009, the key bottoms in the market took place with the VIX getting above 40. Well, it didn't do that. It just got to 35 a couple times. So we didn't see the real type of panic that I was looking to see, but the internal action shows that there was enough. And these indicators, to me, supersede the VIX going to 40. And the VIX could go to 30, and that's panic. But since 2009, 40 was the level. We didn't get to it. So that didn't happen, but this is much more significant. Now, he notes, though, this on the upside, after the bottom, the momentum turns into an advance, and it's a powerful advance. Strong momentum represents the start of a strong move. Now, momentum isn't simply the Dow went up a lot of points, because the Dow can go up 1,000 points in a day during bear market rallies. It typically does. And they become fake outs and traps. Strong up days on the NASDAQ don't mean anything in themselves. No, what he means by strong momentum is the stocks inside the stock market, widespread buying, just as there was widespread selling in stocks. And that's why most stocks, only 15% of all stocks below the 200-day moving average in October. There is huge buying across the board at the start of a strong, powerful move. And he coins this breakaway momentum. And he defines this as a breadth thrust, in which the total day advances on the New York Stock Exchange, the number of stocks going up, that is greater than 1.97 times the 10-day total New York stock decline, declining stocks. In other words, over 10 days, there's 1.97 times the stocks going up than decline. Basically, twice the stocks are going up than going down. And this has only happened 25 times since World War II. And he, looking at all this data, this is what launches bull markets. This move begins bull markets. Now, it doesn't tell you how long the bull market's going to last. So this is not to say the market's going to go up for 10 years or it's going to go up 20%, for 3 years. People, I believe, and I fear, people have the expectation that what happened from 2009 to 2022 through 21 is normal, that you just get these huge moves, especially the latter half of that time period. They're back-to-back 20% returning days, and it was abnormal. So that's a whole nother topic for another video. I think I'll do that tomorrow. This is what I want you to recognize now. I'm going to show you the decision point chart gallery on stockcharts.com so you can sort of visualize what is going on here. They've got, these are all momentum and breadth indicators. So you can see here, this is the advanced decline line right here. Here's the S&P 500. The advanced decline line is the blue chart on the bottom. And you can see how it completely soared in the past week, and so did the volume. And right here is an even better way to understand what's happened. Is this is the number of new highs at the top, represented by green, and the number of new lows. So inside the S&P 500. So on Friday, there were 10 new 52-week highs, 2 new lows. On Thursday, which is the day this gentleman made his post about the breadth thrust, you can see that there are about 14 new highs and 1 new low. So the number of new lows in the market, it really has vanished this year, since the start of this year, whereas new highs have gone up a little bit. What's important is the number of new lows has really dissipated. The selling in the market has really dissipated. And that's what's helped to create this breadth thrust. Now, we could draw a trend line connecting all the highs of the S&P 500, and you'd see that we've closed right on it. Maybe I'll do a post about that too. But as I say, and I've tried to share in a couple of videos, when I look through the stock market and the individual sectors and stocks, there's so many of them that are now right above the 200-day moving average and consolidating right above it, in a position to break out. The banking stocks basically already broke out Friday. A lot of the consumer stocks, industrial stocks are breaking out. The strongest stocks since October have been copper, mining stocks, coal stocks, industrial stocks, mineral stocks. This is not a market that's going to be, led by technology stocks and growth stocks. This is a completely different market environment. That's typical. When you get a new cyclical bull market, you have new leaders than what led in the last one, and often those previous leaders become laggards. That's Tesla's going to be a laggard. ARK's going to continue to be a laggard because it's made up of those fat stocks. So keep that in mind. But here's a neat thing on his post is he lists the times that this has happened, January the 12th. And he noted that the bigger the move, the bigger this ratio, the better the move is going to be. So we've got a 2.16. You can see March, this is above 2. It's not the biggest move, like breadth thrust, so to speak, but it's a good one. It's above 2. There's a 2.5 in 1962. 1976, 82, giant one. 82 is one of the most important dates to start a bull market in August of 82 period. Another breadth thrust actually happened in October that year. So if you can get multiple ones after another one, that happened in 2009, there were 3 that year, 2016, 2, 2020, there's one in June. So, a couple in a year is a sign that something huge is developing. 82 is really the launch of a secular bull market. Bigger, that's one that lasts over 10 years. Same thing in 2009. So if we get multiple ones this year, that would be huge. I really do not believe that's going to happen. But if it did, it happened in 62, that would be very, very noteworthy. I'm not looking for that to happen though. And he has this chart of what has happened with the market every time this has happened. And only once in 1 year was the market down, and it was up for 6 months when it ended down. And that was in 1987 at the beginning of that year. So the stock market crash hurt the market, but it had a huge rally into the crash, obviously. The medium return is 20%. I'm not in a year. Again, click and you can look at this for yourself. Now, I'm not going to predict how much the market's going to go up. I'm just saying in this video, I just want to leave with the conclusion that this is powerful evidence that this is not a bear market rally. This is a start of a real move. That's a cyclical bull market. This data doesn't tell us how long it's going to last or even how high it's going to last. But the odds are it will last a year at least. I'll talk about that in another video, how long I really think it'll last. Median return is 20%. Honestly, I'm going to just I bought more stocks this year, and I'm more conservative in what I'm doing. And I'm just thinking a 15% move, and you can see in 2009, this was well, after the first one is a 42% move, but you can see, there's some smaller moves in here, 11%, 8%, less than 10%. If the S&P were to rally up to its high, really, it doesn't even have to get that high. If it just rallied towards the high, you get a 15% gain in the S&P 500. But the right stocks, the right sectors will smash that type of percentage. And I think gold and the mining stocks are going to be among the best things to invest in and will beat the performance of the market. So I'm about trying to beat the performance of S&P 500 by buying the top performing, the leadership stock things. So if we can get a 15% S&P 500, I believe the best performing sectors since October will smash that return. And that's all I'm trying to do. But this information in this video, and again, go read it for yourself, creates a powerful backdrop this year to be buying stocks instead of betting against them. That's telling us that the trend has shifted over the past couple months. This is January the 15th. Let's say over the past 3 months, the trend has shifted. Now, in my videos, I was bearish last year. I was warning of a bear market the year before. I was not able to do a video the day the market bottomed and say, this is the bottom, this is the bottom, this is the bottom. But I am able to watch the data, see when the trend changes, and inform you on that and do the best I can to keep my views in alignment with what's going on in the market. I can't pick exact tops and bottoms. I don't try to. I try to change when the trend changes. That's not about predicting the future. That's about riding what the market gives us. And that's what I'm all about. And also getting in the best sectors, best asset classes with all that. And there's much more than just the S&P 500, so much more than Tesla, so much more than crypto coins, which are going to be laggards. And foreign markets are doing even better than the United States stock market in this environment because the US dollar index peaked out last year. That's why gold and silver are doing so well. But this is huge information. Go read it, and I'll be talking with you later. If you like this video, hit like. If you want to get my next video, hit the subscribe button and hit the bell next to it. And I'll be talking with you later.